Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here once again with Dan Michelon. How you doing, Dan?
I'm doing well. Doing well.
Good.
Happy New Year, everybody.
Happy New Year. I can't believe it's a whole nother year of us.
I was going to reference the market, hopefully a better one there, but we'll be as good as always.
It's pretty good.
Much you can guarantee.
Seth's not on today.
That's true.
It's a positive.
A little quieter here. You know. Seth's doing well. He's just not feeling well, but he's no more hiatus from the show. He'll be back next week for sure.
I hope so. Man, we have a show for you today, and I think it's extremely timely and relevant as we work through trying to figure out how to mitigate losses. A lot of people contacting us about, I have lost this much in my 401k, and how should I be allocated? What's going on in this marketplace? And there's a lot of conversation around that. And our show title today is, protecting yourself and your money. Big conversation that's going on, and we usually find that to be an issue, when the market has severe downturns, and there's a lot of conversation about impending doom, and what's going to happen. If you have questions on that, you can reach us at 855-226-8551 or email us at info@yourmoneyontap.com, because it's about your money. And we look forward to helping you and working through questions and concerns you have. We've had actually a lot of people over the last few weeks been reaching out. So I think that obviously has to do with a lot of the downturn of the market. So don't be afraid to do that. Today's show, protecting your money, protecting yourself. There's so much stuff that people are looking for on ways to get back in the market and to recover. And this becomes kind of the time period when either you're getting into a scam or scams are getting discovered. There's a lot of investment scams that have happened. It's pretty crazy. We're going to get into it, but 1 out of 10 investors have been hit by some sort of Ponzi scheme or scam. It's pretty crazy.
It's an incredible number, and these are the times where people are susceptible to that, right? So for most of us, you've experienced some kind of loss in the market. You're hoping to recover that. And these fraudsters know that you're tuned in to hear these words, right? Everybody's very susceptible to an offer right now of, hey, let's replace those losses, guaranteed returns, risk-free investing. So all of that is going to catch anybody's attention, particularly kind of do-it-yourself investor, because everyone's focused on recovery, right? How quick can I get back what's been lost? So we're open to those kind of ideas, and we want to have those conversations. But it's very much a time to have that buyer beware mentality.
Yeah, something you're not looking to grasp for when the market's up 20%, right? You're not like, I need to,
Yeah, why make changes? Why take undue risk? Everything's great, So, when we're in that kind of phase of a market cycle, it's harder and harder for these fraudsters to get your attention and your time, much less account information and really critical details and specific, unique information about yourselves. But when things are bad and recovery is the mindset, everybody seems to get a little bit more open to what they otherwise might not consider.
Agreed. And I think everything we're going to talk about today, it's kind of interesting because every scam has a little bit of truth in it. That's the whole thing. It has to sound a little bit believable. It has to have a little bit of possibility, and it has to have a little bit of that. And so hopefully, you'll be able to really reconcile as you're talking to people or looking at things or considering an investment, that you can actually ask the right questions, that you can actually, ascertain, am I really kind of stretching too far here? Is this kind of an unbelievable, too good to be true scenario? Because I've had clients sit down with me. I was talking to one gentleman the other day. He's like, I remember sitting in my house thinking, this whole plan is too good to be true. I didn't even think I could retire. And, I'm thinking of this guy, Don, and he's a really great guy. And he just has, he's just happy, go lucky. But so there are times when you can find the right investment that just feels good, but you have to know how to ascertain when it's gone too far.
And one of the things that we're going to dive into here is how to fact check your source, right? Yeah. How to verify that you're getting this information or this offer or this solicitation from somebody who's actually credibly in the business. And it's not as simple as it used to be where, hey, if we Google the name and they got a website, well, they must be legit. It's way too easy to put up a professional-looking website these days. That's 10 minutes worth of someone's time. You really need to go steps beyond that.
Yeah, absolutely. Well, before we get deep into our show, which I should be interesting, we have for you next Money in the News.
And first up, this is coming to us from CNN, from Matt Egan. Americans spent a record $212 billion online shopping this holiday season amid deep discounts. And that to me was a staggering number. And, as we're fighting inflation and gas prices, and we've had all this kind of, downward pressure on our wallets, well, almost working on a year now, I think there was some sort of an expectation, this holiday season might be a little bit of a disappointment at the register. But truth be told, the numbers are in now, and that was really far from the case. This $212 billion represented a 3.5% increase from the same time over 2021. And when you consider inflation was running at 8 or 9% at that point, that's a considerable additional spend out of everybody's household budgets, to have the kind of holiday season they hope to have. And the reason in the way that they were able to do this, these retailers, is that they offered some pretty steep discounts. And it was kind of interesting to read here that, at least these sellers recognized that, hey, if we're going to drive the business, we need to really kind of sweeten the offer. And they did so. There's a toy markdown of 19%. But there was other discounts. Electronics hit 25% discounts. Shoppers also found significant discounts in computers, apparel, television, and appliances, all double-digit discounts. So I think the sellers recognized the threat to their balance sheet that we were all experiencing, and they reacted accordingly, and they were able to drive solid sales.
Yeah, I think there's a lot of conversation around this piece specifically from the investment side and kind of what people should be looking at. Because when I was reading through this article, and I was kind of enamored by the fact that it was only an increase of 3.5% year over year from 2021, 1 year after COVID. I remember COVID being an astronomical increase of online shopping, post-COVID, like even the year after, we're talking.
It was the only way, right?
It was the only way to really shop. So you had this massive increase. So this is still a step up, even though they've, done these record cuts to get people to buy online. It's just really interesting because I think when I look at things like Amazon trading at $80 some odd a share, I think I go to Amazon more than I go to Google.
It's got to be close. Yeah, I've never thought of it that way, but it's got to be close.
Yeah, I mean, I don't know about other listeners, but I'm looking at that saying to myself, when you think about online shopping, you think about the course of our world, now we're post-pandemic, now we're kind of out and about. I mean, I don't see very many people out there with masks. The world is kind of back alive. Maybe there's a ton of people at home with masks. I have no idea that are scared to go out and kind of have that fear. But the world is moving forward. And yet we still had an increase in online shopping. You think about all the things you could do. Like I even offered my wife, I was like, hey, let's go get dinner. I'll, help you shop a little bit more this year, because it's just not my number one pastime. But she's like, no, I got pretty much most everything online.
I mean, there's a couple funny things that come to mind with that, like how much online shopping is crept into our everyday activities. Like we're dealing with this ongoing children's Tylenol shortage, right? I don't know, you don't have kids that age necessarily, but I do, and so it's a big problem. Target online. My wife was able to find it and get it shipped here. Even though you cannot go to a store and find it on a shelf, and I'm probably about to start a run on Target, the website here, but they will actually ship it to you. We got 2 bottles of children's Tylenol in 2 weeks, and you cannot find it literally anywhere else. My 5-year-old started calling the Amazon guy uncle, like a different guy every day, but hey, uncle's at the door, and I'm like, well,
So you start calling him Santa.
Install the security camera the next day, but
there's a person I know, and he said to me, I buy gifts from Amazon for all of my kids, and I buy an equal number of gifts, and I have them deliver them in a way that they're only in one box. And he puts the boxes as they are, wrapped from Amazon, under the tree, and they do a Yankee swap Christmas, and it's like everybody opens something, and that's for Joey, or that's for Sarah, That's another way of looking at it.
It's hard to imagine life without Amazon at this point.
Yeah.
They're turning into an Amazon infomercial here, but I mean, truly, it's just an everyday part of how we shop.
Yeah, I think there's like a few places you go. There's like Amazon, Best Buy, Staples. There's like a couple of like online places that you're always comparing Target that you go to. And these are the online shopping, Walmart meccas. that as you consider long-term investing and you're looking at this down market, these might be things that you might want to start evaluating where maybe money, might be a good buy. Because as we kind of wrap through this period of sell-off, which I think is going to exist for this next quarter or two, we're going to find a bottom here. At the end of the day, we're going to be back on some stocks where pre-pandemic levels.
Yeah.
So we'll see what happens.
All right, next up, we've got an article here from Fox Business from Daniela Genovese. Cruise industry poised to make a strong comeback in 2023. Now, this was another kind of good time we had during the pandemic. Ben and I and some other advisors that we know and investors were kind of playing the cruise line stocks up and down because they were fluctuating wildly during that whole phase. It wasn't really the kind of advice we'd offer for a customer because it was certainly high risk trading.
We were having some personal fun with it for sure.
That was more of a, throw a couple bucks at it, see what happens type of a thing. But we were able to kind of pick up on a few trends with how those things would move. I mean, it was an absolute up and down, up and down, up and down experience. And for good reason. I mean, all these cruise lines were going through a period of time where they didn't think they could launch a ship ever again.
It was very much inappropriately trading options around cruise ships.
Yes, it was. Again, not retirement savings advice, but
yes, agreed.
But it was still interesting to do, and it was one of those just unique experiences of how this pandemic affected the market and the investing world. But point of the article, getting it back into kind of the present day reference, is that things are looking up for 2023. The cruise lines are expecting some significant business, and they as well, through Black Friday and Cyber Monday, had an absolutely record number of bookings come through. And as they poll people, more than half are saying that they're likely to take a vacation in 2023, kind of foregoing all pandemic concerns, which is up significantly from the prior 2 years.
This is incredible. I was looking for the quote, Dan. Was it like the cyber, wasn't it that they were up 45% or something from like previous all-time, like they were up from previous year 45%. It was an all-time high, right?
Yeah, considering taking a vacation, it was a 45% increase in polling
for cruise lines
for year over year.
Yeah. I mean, that's just incredible. I mean, that is just an incredible, like, we're never going to launch a ship again to, hey, they talk about the relief of the COVID restrictions in the cruising world. And now everyone's like, hey, let's go on a cruise ship. And it's cheaper than, everything else.
Yeah, I've always thought it was a great way to vacation because it's, it's not exactly all-inclusive resort kind of a style, but it almost is. And, you're able to take, I've done a number of them where, it's more about what you do off of the boat than on the boat, but you have your kind of built-in hotel room, right? It just brings you spot to spot and allows you to just go ahead and, use it as a floating hotel with all of your amenities, and you can still debark and go do crazy, wonderful things on whatever port of call you're in. So I've always thought it was a good way to go if you don't get seasick,
Yeah, no, I think it's great. I mean, I've only done it once, but it was a good time, and I went with some good people, and it was a all around a good experience. So I think the cruise industry is stock wise has taken a hit, and how these numbers actually pan out in their returns and so forth, and how they get out of some of the debt they've written, and they've obviously sold more stock. They've done all sorts of different ways to raise funds to keep themselves alive. But I would tell you that if I were to look at the demographic side of all of this stuff, from hotels to cruise ships to airlines, I mean, there's a lot of these very difficult places to play with your money. Like this is not I'm going to depend on retirement, but if you're looking for that space, when we talk about 40 million Americans roughly that have retired, which is 15-ish plus % of America, and we have another 80 million that are going to retire in the next 20 years. That's going to take us to over 35% of America retired. That is a massive demand on vacations that people have been planning or thinking about, whether it's here domestically or abroad or whatever. And honestly, cruise ships are, some of the more affordable scenarios. So,
yeah, I mean, the whole vacation and kind of recreational segment of the market is, it goes through cycles, and it's often up and down. I wouldn't probably put those in the 10-year hold investment thing, but if you're looking for a 10-month type of an opportunity, it might be a good time for that.
Yeah. So I think that's an interesting conversation about all the hotels and all of these places, especially as this market kind of finds a bottom, and you find something that you like and feel comfortable with that risk. That would be probably an area that, might be appropriate. I mean, I look at airlines right now and the tank. I mean, and all these companies have overwritten debt, so you're taking on huge amounts of risk, and that's something to really be careful. But I think the long-term demand for whichever of these companies do survive and make it through, the long-term demand's there.
And then that's where ETFs come into play too. Not to get too narrow on the investment advice here or the consideration, but if picking any individual airline or cruise line seems like a daunting task, and you don't really have the background to dive into a balance sheet and make that analysis about the debt load that they carry, that to your point, Ben, they have ETFs designed specifically around this whole sectors, and you can get in and out of those relatively easily and kind of cover the whole field of individual stocks that fall into that group.
Yeah, because the last thing you want to do is put all your money in U.S. Air. So.
Yeah. Or any of them. Any of them at all.
So that was a bad joke for anybody who knew that U.S. Air is out of business. So next up, we have here from MarketWatch, is driving a big part of your business? Good news. IRS increases tax deductible mileage rate. Here's how much you can deduct. This is by Andrew Keshner. This is an interesting... This is good. I mean, basically, the IRS has said for people who are driving in between one office or another, or going to visit a client from their office, this is not for, driving from your house to the office, but you can deduct your mileage for business. And they went from last year being 58.5 cents a mile all the way up to this year being 65.5 cents a mile. And what's really interesting about this, and that's basically almost a 15% increase, a 15% increase on year over year. But actually, back in July, the IRS raised it to 62.5 cents, which was a mid-year raise just due to the price of gasoline, going over $5 a gallon.
Yeah, for everyone who's self-employed out there, business owners or rideshare drivers, the kind of occupations that fall into the categories that allow you to claim this deduction. That's something to keep in mind if you're doing your taxes yourself, or just as a reminder to whoever does prepare your taxes, keep an eye out for that mid-year increase, because if they're using a flat rate for the entire year, or they're not aware of that increase, you could be cutting yourself short on that deduction.
Yeah. No, I think that's interesting. So just tell your CPA that you did all your driving after July 1st. I'm just kidding. But it is interesting that the IRS has actually did note that year, halfway through the year because of that massive increase, and which makes mileage logs significantly more important, because you're going to probably have to break out the mileage you did in the first half of the year versus the second half. And, probably most CPAs will just divide your number in two.
Yeah, they'll probably just average it. But there's a lot of apps out there and different tools. If manually logging this stuff is, burdensome, there's lots of different technology-driven ways to do this easier and, still be able to have the information you need to make a claim.
Absolutely. Absolutely. Well, you've been listening to Money on Tap. We're going to take a quick break here and come back with Protect Your Money, Protect Yourself. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. That's info@yourmoneyontap.com. Don't go anywhere. We're going to be right back.
Folks, it is so much fun for us to bring you Money on Tap. My name's Seth Krussman, and I am one of the hosts here at Money on Tap. I'm also a financial planner. That's what we do. That's what Ben and I do. And the fun part is we get to have this radio show. We talk about important things that we think you need to listen to and be aware of to help raise the bar as far as your financial literacy. It's a big part of what we're trying to do here. The other thing that we're doing here as well, as financial planners, we are welcoming you to come and call us and to join us at Brayshaw Financial Group. Experience what complete wealth management looks like. Let's take a look at all sides of the issue, get a three-dimensional perspective, and put a plan around your next step. It's so critical. And so many people just leave this part out, and then they find out later, if I only would have known. Hey, don't let that be your story. Give us a call at 855-226-8551,
or info@yourmoneyontap.com. If you have $250,000 of investable assets today, our plan is free to you. We think it's important for you to know the facts and have a playbook so you can have a successful retirement. Give us a call at 855-226-8551.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here with Dan Mickelon. Seth Krussman is out this week feeling ill. He's actually pretty ill, so prayers out to him and that he would feel better soon. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. We're talking about protecting yourself and protecting your money. The entire concept of the show this week and what we want to really kind of bring to our listeners and to you today specifically is, when the market's down, a lot of people are really trying to figure out how to kind of bounce out of it better and faster than everyone else. They want to see that number back up where they wanted. They start looking for investments. They start taking more risk in certain stocks. They start looking for things that might be a quicker return from wherever they were at to wherever they are now. And we understand that concern. We understand those fears. And we want to really kind of help people get away from, that feeling and be more the tortoise and not the hare, kind of scenario, and really look for solid investments and also to avoid getting into something that is detrimental and financially devastating.
Yeah, I mean, it seems obvious to say, but the worst thing that can happen to you is to truly have your money be stolen, right? I mean, we can make bad investment decisions that perform worse or recover slower or just aren't what we hoped for going in. But if it's done legitimately with a legitimate firm, you still own the asset you bought, regardless of how it's performing, versus taking the risk and engaging somebody versus buying any kind of asset or making an investment decision through an irreputable or just outright fraudulent entity where whatever participation you get with them is likely to lead to the absolute draining of your accounts, right? So you're not going to own an asset. You're not going to have anything with any hope of recover. You're going to find yourself in a position where you were simply robbed. So there's a number of different types of schemes out there that we just want to bring to everybody's attention here. Make sure you're aware of what the approach might look like, number one. Number two, how to recognize, when you're falling into a trap potentially, and how to best do your own due diligence just to verify that whoever you're speaking with, whoever you're engaged with, is a legitimate firm, a licensed entity that's regulated by somebody, and therefore far less likely to be out there just to outright steal your money.
Yeah, I mean, everyone's heard of the word Ponzi scheme. That came from Charles Ponzi, the actual person back in the 1920s, who said, give me a nickel, I'll give you a dime. He promised 45% returns. He put 5 banks out of business. I mean, he was able to basically make $20 million back in the 1920s, which is equivalent to, more than a quarter of $1 billion in today's money. It's...
Yeah, he just took out simple little ads in the back of magazines. We literally promised that. Mail me a nickel, I'll mail you a dime. And he got a lot of nickels.
Yeah, he got a lot of nickels, and it's just a lot of different stuff. I mean, we think about all the different scams. I mean, it's like Madoff. I mean, Madoff is, because he was so well known in the world, he was, helped write some of the rules way back when. I mean, he knew the story. No one questioned him. He promised returns that nobody could do. The SEC didn't figure it out.
Yeah, that was part of the impetus for the show, honestly. I've been watching the Netflix series on Madoff at home, and I recommend it. It's of particular interest for those of us in the securities industry, but for anybody, it's just really an interesting story, and it's truly amazing what he got away with simply based on his reputation and who he was. I mean, he founded a legitimate business. He found a lot of success in a legitimate way. But he took a dark turn there and became, an outright thief. But because of the reputation he had, even the regulatory bodies that are responsible for this, who we're very familiar with, and, when they come into audit year, it's no joke. But, he literally got away with this by nature of his name on such a massive scale, it's really hard to quantify. but it happens. It's out there. It's not all small time and kind of word of mouth approaches. Some of these solicitations look like they're coming from major legitimate entities, and it's very easy to be fooled by it. But there are a couple things that you can do from a protecting yourself and due diligence step point of view that will really help you kind of weed through what's an illegitimate offer and what's for real. But there's a couple different types of scams that we wanted to highlight here for you because they're some of the most frequent. And the Ponzi scheme is certainly one of those where, essentially what that is you get a bunch of investors to give you money under the guise that you're investing it on their behalf. When in fact, you're not investing in anything. And people actually get returns out of this. So some people are able to call in and say, well, give me my money back or give me my money plus a return. And they get that money. But all that does is inspire future funding. And somewhere along the way, the game ends. There's no more money to return to investors. And the thief is off with whatever they're able to keep. And
this type of scenario is extremely, hard to track, especially when they promise, income only. So if it's income only and, they say, hey, we're buying real estate, the real estate's not liquid, but we can get you income, there's that scenario where it's like, oh, well, I can't get all my money, but there's a statement that says I'm worth XYZ because of real estate. And that's kind of an easy scenario. No, there's tons of real estate out there. There's tons of legitimate real estate programs that do exactly that, but it's a great way to sound and look like something legitimate and create enough illiquidity that you can't catch them until the whole thing starts collapsing. And that usually takes many, many years. And that's a piece where real estate seems to be a big piece. Kind of the things to look out for, right? Every lie has a little bit of truth. I think we've all heard that concept. But some of the kind of the promoted, come-ons that we have out there is like massively high guaranteed rates of return. Now, Dan and I were talking before the show about CDs. We were talking about, hey, listen, you look for CDs and you find out there's a CD rate. It's a little bit better here. It's a little bit better there. But when you start seeing CD rates that are outside the normal, there just seem to be, wow, this one's really high. Banks can have risk too, and a lot of people don't realize that. And banks who need to bring in more deposits to offset, the amount of money they've loaned because they have to have these special balanced numbers inside what they're loaning out. They have the ability to offset that by borrowing money from other banks in what we call the overnight. But for them, that's an extremely expensive way to cover what they're required to do. So what they do is they offer really high CD rates to attract dollar deposits into their bank to offset what they've lent out, which is usually potentially more than they should have. So that being said, what's really interesting in that piece is that those banks are susceptible to going under. And that's when FDIC claims become really relevant. And banks literally go out. There's always banks almost every year that I can think of that have gone out of business. If you do a Google search, you'll find that. And, if you have more than $250,000 in there and you're an individual, there's a portion of that that's not insured. And separate from that, if you're investing in a bank like that, you still got to go get the money through the FDIC. Like you actually have to fulfill the claim, and that means you may not have access to a certain level of funds for a certain period of time, and that's complicated. So guaranteed high returns in general are something, whether it's a bank or an investment or any of those things you should be buyer beware.
Yeah, if there's two different things that can be going on. There could be a bank or a financial institution that's found themselves in a bad place and they need to attract revenue and investment. So they're legitimately taking on too much risk.
Right.
Warning sign to you as the investor, don't do that. And then there's also the fraudulent approach where, and this has been highlighted in lots of different instances through history, where the promises of high returns with zero risk, as soon as you see that, I can tell you right then and there that is fraudulent. That's not legitimate. There is no such thing as high return with no risk. Anything that says that they're talking about a risk-free investment, then, unless it's a CD, which,
or a pure fixed annuity or something that actually is underwritten by an insurance company of some level. I mean, because everyone doesn't realize that the FDIC, it's a form of insurance. They're insuring your backing behind a bank. And if you're buying from an annuity company, you're buying some level of insurance because it's backed by an insurance company. So those are the types of things that are out there. Like even your pension that you're collecting, right, is backed by the SPGC, right, Pension Benefit Guaranty Corp. It's literally a company the federal government mandates to be in place to provide backing. So you either have to have a guarantee. It needs to either be backed by the FDIC, backed by the PBGC, the Pension Benefit Guaranty Corp, or backed by an insurance company like an annuity.
In any of those opportunities, any of those investments that are legitimate, if you question the solicitor, say, hey, listen, these returns look great, but who's backing that up? Who's ensuring your ability to pay out? If they cannot produce something for you in writing that literally names the institution, something along the lines of a prospectus,
right?
You know right away that you're dealing with somebody who is not telling you the truth.
Right. And so you have to really kind of look through that. If you're taking somebody's word on anything, that would be something we would advise highly not to do. You should be able to get everything in writing, black and white, from a company that you can verify by a third-party source if you'd like to.
Yeah, that's exactly right. There's a verification process that any legitimate entity can be found through that will put you in the right direction in terms of at least giving you the first step in vetting who it is that you're about to engage and do business with.
And so that's kind of the low risk. I just want better returns, kind of get caught up in, kind of some guaranteed thing, whatever. But then there's the thing. I get these phone calls all the time from people, and I never know what's on the backside of this. But hey, my buddy's got an investment program. It's private. They're doing a private capital raise. Would you be willing to take a look at it and tell me what you think? And I'm like, listen, I'll tell you what I think right now. Don't do it. It's not what I do. I don't do research. I'm not a CFA. That's not a part of where we would go in the independent market space on that. We manage investments. We are wealth managers. We're financial planners. We review investments and stocks and, the equity space, the insurance space. We're fiduciaries, but you want to go to something private that's, outside the purview of, the general SEC, FINRA. We're not interested in even considering it. It just wouldn't be on the table. And it would be a private securities transaction. And so we're prevented from investing in it, actually.
Yeah, we can't even partake in something like that.
So to even give advice or be involved, it's just not. But exclusivity is something people really like. They like to be special. Everyone wants to feel special. It's just kind of that innate thing. Why does everyone want to be a rock star or a movie star or whatever? I don't want to be any of those. But that being said, it's like it's the exclusivity that is hey, listen, I'm going to get you in. It's my buddy. It's a favor. It's all these things. Oh, I'm going to be I have clients that I know. I have clients that I know they had the exact same exclusivity offer down in some Connecticut company before they ever met me, and they got taken pretty bad, and it hurt. But it was exclusive through a friend. That friend got burned too. It wasn't, Yeah,
in that Madoff show, there's one example that was really heartbreaking where it was some grandfather in Florida, and he'd given Madoff his life savings, and he'd encouraged his kids to do it, his grandkids, his siblings, and this was an item of pride for him, saying, "Hey, listen, I got you all in, right?" And in the end, everybody got ripped off entirely, and it was absolutely crushing for this guy and for this family. And that whole exclusivity notion is something to be mindful of. If it's a legitimate offer, it's probably not that exclusive, right? The people trying to raise funds aren't particularly concerned with where they're coming from. If it's legitimate, then there's always process, there's always verification. You never just hand off a check. And the notion of writing a check to somebody personally on behalf of an investment, right away, massive red flag, not legit. That is not how it works.
Even with Brayshaw Financial and our financial planning firm, people don't write checks to Brayshaw Financial. We don't house the money. We house it with Pershing, which is owned by the Bank of New York Mellon. It's the largest clearinghouse in the world. We keep things very clean. People who are going out of their way to keep it clean, keep it clean. It's you should be able to know exactly where your money's sitting and so forth. So I thought this was interesting too, we talked about, exclusivity or getting in the ground floor kind of concept, but breakthrough technologies. I have had a couple of wealthy clients who have, hey, I've got opportunity. There's a stock, there's a company, there's this, that, stocks are not, it's funny, just because it trades on the New York Stock Exchange or, over the counter or any of the different exchange opportunities doesn't mean that it itself is not a Ponzi scheme, or that it's a legitimate, valid investment. So buyer beware on all of that. I mean, it's like anytime you start hearing about, and this may not even be a scam, but it could cost you a ton of money, is, hey, listen, they're coming up with this XYZ drug, this, that, medical device or whatever, or this software is going to be the new, you need to really, really, really watch out for that stuff. If you're looking for retirement, you're really looking just to, grow your assets, strong, big, reliable companies that are doing business every day, that are profitable, are wise places to start looking at for putting your money.
And there's lots of examples that companies have all the appearances of being legitimate organizations, but are unfortunately have a few bad actors within. And Enron's the prime example of that, right? It was energy exchange company, one of the hottest stocks in the market for a long period of time. They had every reason to believe it was a completely legitimate operation, but fact of the matter is there was all kinds of internal thieving and over leveraging, and in the end of the day, everybody got burned. So there are things out there that are to a higher degree difficult to discern as to what's actually going on there.
Yeah, very, very important. And sometimes the tortoise versus the hare is really the best way to invest anyways. I was just thinking about, our blue chip portfolio. It's a value-based portfolio. I remember people complaining that we weren't doing the 40 some odd percent that some of our, 80-20 models were doing one year. It was like up, 16, 18%. But it was a lagger, quote unquote lagger in the market. But then last year, December to December, it was up for the year. I mean, it was just like, so to think about that, sometimes the tortoise and the hare, it really does work out. And just taking a really, conservative, legitimate, big boy blue chip approach is sometimes the easiest thing. Or, you know what? If you just kept money in bonds for 20, 30 years, it could be a winner for you now, depending on the amount of risk you took.
And another major, tip to make you be skeptical is these limited time offer type opportunities. You see about a lot of those kind of solicitations that are out there that, they're trying to pressure you into making that decision quickly. And I would say for the vast majority of times that's not legitimate. There are some investments that are completely legitimate that have kind of an offering period that will expire at some point. But those are fairly rare, and the validation around that, period to get into it is pretty easy to come by. Again, you ask for that printed material, you verify through a third party.
Yeah. Well, you're listening to Money on Tap. We're talking about protecting yourself and protecting your money. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Don't go anywhere. We're going to talk about the tactics, and then we're going to start talking about how you can find confirmation about legitimacy in an investment. Stick with us. We'll be right back.
For a number of our listeners, they have a lot of questions, and you might be one of them. Today, we're just offering what we call Zoominars, webinars over Zoom meeting rooms, where we have top experts, Social Security, estate planning, and financial planning experts for you to speak with, do a private consultation that way today. We're also having webinar-based Zoominars where we're going to have multiple groups where you can be part of that and enjoy that as well. Give us a call at 855-226-8551 or email us at info@yourmoneyontap.com to schedule your Zoominar.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben and Dan.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here with Dan Michelon. We're both planners and partners at Brayshaw Financial Group. Seth is not with us this week. He is sick, and we miss him. He always makes our show even more interesting, I think, Dan. But, we're talking about protecting yourself and protecting your money. Man, the most important thing, when people start looking to reach out and really amplify their portfolio, the amount of scams are either discovered during a downturn in the market or they're started during a downturn in the market. And those are the worst things that happen to people, is that they start reaching to really try to find those returns. Everyone doesn't have enough money. That's the mindset. And so when you lose it, You already feel like you're already behind the eight ball, and you're actually racing to try to get back to where you were, nevertheless ahead. And people start reaching. But the tactics a lot of people use, and I got to be honest with you, I've had clients even this last year that have called me that have said, hey, I got scammed. Someone called me, reached out to me about XYZ, and I gave them my credit card, or I did this, or they have my bank account information or my social security number. It happens to everybody. I mean, and I wouldn't feel embarrassed or like, hey, it is literally so prevalent and so sadly normal that, 1 out of 10 people are actually scammed.
One of the things that allows this to continue to go on the way it does is exactly that. People that get taken, they feel shame and embarrassment around that. Like, how could I possibly have been fooled? And because of that, they don't report it. And that, I can certainly understand that. And, it's not necessarily something you want to share with everybody you know. But the fact that it goes unreported just allows these people to get the next victim. Oh, yeah. So if you experience that, there are certain places where you can discreetly and anonymously, kind of file your complaint and let people know. And we can certainly help in that process if you've been victimized. Not that we're any kind of enforcement body, but we certainly know where to bring a complaint and to raise an issue. But if you experience that and you're hesitant to report it, out of fear of whatever reprisal or shame, certainly, do the right thing on behalf of the next victim and get word out.
Yeah, a lot of people are not only scammed, but they don't even report it at all or do anything about it because they don't want to, and they continue to pay for those scams. That's really bad and sad, and we could explain that under another scenario. But we've seen people hurt, and if you've been hurt, you've been damaged, give us a call. We'd be happy to talk with you about it. There's a lot of people who are trying to figure out how to get past a scam. They're trying to catch up from that, nevertheless, everything else. Give us a call. Be happy to chat with you and try to get you to a place where you can make retirement a successful reality for you. But the tactics or the approaches that a lot of people use is, kind of the lofty promises. We talked a little bit about that, the hard sell, hey, you got to make a decision right now. We've got limited time. And I can be honest with you. I've told people like, hey, here's an investment product that, like there's mutual funds that have, they're closed-end mutual funds. They're going to end. There are legitimate investments that do have, kind of end dates to how you can get your money in. But I've never like, hey, listen, this is an event, but we'll always find a replacement investment. Yeah. There's always another option. So I tell people, hey, here's the timeline. Here's the scenario. Am I overly concerned? I'm not. We'll find a replacement. We'll find something suitable. It'll all work out. But if you really feel passionate about this is the time period. And I literally lay it out that way.
There's a big difference between being factual about deadlines, which can exist, and putting pressure on people to make a financial decision. We'll share facts with you. We don't pressure anybody into giving investments to us. There's just no reason to.
And if someone does have a deadline or a date, they should be able to show you something that says this is a closing date.
Oh, yeah. That's even to open an investment that ultimately closes is you have to go through so much scrutiny and there's so much publication. There'd be reams of paper to back that up.
Yeah.
That's not something that's word of mouth or can't be documented or.
I love the reams of paper, Dan.
Oh,
reams of paper.
It's our world. It's our world. Thank goodness for the
I could probably
PDF
show them
prospectus.
I could probably show them the computer screen from the financial company, but that's reams of paper we'll get.
Yeah, I'm not even asking to read the prospectus. Just ask for it. If they can give it to you, that's 99% legit.
Yeah, if you ask for a prospectus walking into a financial planner's office, my goodness, I would say you are 1,000-fold ahead of the game because most people don't even ask for it. So the other piece of this is the unsolicited approach: the phone, the email, the text. If you're not looking for help, just ignore it. Go find your own person. Do your own initial search. Or if you're looking for, just the other day I had my phone ring. They said, "Hey, I'm a referral from so and so. Wanted to sit down with you and talk with you." I said, "Sure, I'd be happy to." He's like, "I just don't know what to do. You can Google financial planners and you have 1,000 names pop up and you know nothing. So most of the financial planners and people who are doing wealth management, all of that, you're going to find by somebody you know, right? You're going to find by somebody, hey, how do I know this person? Where are they? Are they legitimate? That's a scary piece, right? That's a scary concern of finding that. So if you're unsolicited, by somebody to do an investment, really, really, buyer beware, and if you get an email asking you to input this, or here's your copy of your statement for XYZ and you don't recognize the company, I hit delete on those things instantly. I don't want the temptation of opening, like, receipt from what? If I don't know it, I don't even open it. I just get rid of it, because I figure, hey, if I owe somebody something, or there's a bill or whatever, I pay my bills. I don't have any concern. So if I missed a payment, I'm sure they'll figure out how to get a hold of me, and I'm sure, the couple bucks of late charges couldn't, be mitigated through a conversation of, hey, listen, your email doesn't look legitimate if you send it to me.
Yeah, it's, I would treat it a lot, like when I'll get these fraudulent alerts about a payment due from, and sometimes it's somebody you actually are doing business with, but rather than respond to what you've received, delete it and then contact them through a means that legitimately works.
Oh yeah, don't call somebody off a phone number.
No, you don't respond to the text. Don't call the number they give you. Delete it and then go to the website you trust and contact them.
And I would just say that with the email piece, which seems to be the highest number of fraud pieces that we see out there, check the email address behind the name that's popping up, because people basically cover it up and say,
make sure it's spelled right.
Spelled right. It's their email. You can confirm all of that stuff. Don't just start clicking on stuff.
Yeah, your credit card is not emailing you through a Gmail address. That's not happening.
My wife said to me, she's like, hey, I got this email about this bill. I go, when, I take care of the bills. When was the last time you paid a bill? Never. So don't worry about it. So, it's fraud. We were laughing about that, because she's like, yeah. And then she got, 3 minutes later, there was a weight loss text that popped up on her phone. I was like, you don't need that one either. So it's kind of funny. We had a good laugh about that. There's a lot of those types of things out there. Now, this was a hard one for me as we were kind of doing the research, and like looking at all the different scams out there. Complicated investments. Like, we deal with a lot of complicated investments. And it's hard for me to say that. But if it's so complicated that you can't get black and white documentation on it that helps you explain the complication of it, that's where I would say, that's where the prospectus would come in for me, Dan.
Yeah, and there may even be times, that it's a legitimate investment, but it just feels so complicated to you that it's just not right for you. Yeah. Even if it's legit, even if you can have every reason to have faith in it, you don't want to have yourself be in a position where you're just up at night wondering if you've been ripped off or making the wrong decision, and just suffer through that. We will certainly take our time to do our best to explain something to you in terms we feel like you'd be able to understand. But if at the end of that conversation you're just still not there, then ask us to do it again, or ask us to look for something different.
What comes to my mind is, Dan, remember, we had a referral for somebody who was selling a building in Massachusetts, a very expensive building. And they were looking at, various tax methods of mitigating that, and something we do. And, we sat down with them, and we got to the point of it where it was like, we both looked at each other and said, this is really not the right investment for them.
Yeah.
And we said that to them, and they agreed, and they went to the bank and bought CDs. It was just not their risk level. And I think that's really what's important is being able to sit down with somebody that says, let's find something that you can get comfortable with, so you can really own your investments and literally sleep at night. Because that's most of the issues. Well, so let's step into how to verify your advisor, like how to verify that you're working with the right person. So, we call ourselves, we do 3-dimensional planning. So we do insurance, brokerage, and fee-based planning. And the piece of this that's really complicated in our industry is there's lots of different types of licensing, right? And so sometimes when you sit down with somebody, they're an insurance agent, and they sell insurance products. That's what an insurance agent does. And then sometimes you sit down with a financial advisor, and the financial advisor sells stocks or sells ETFs or, sells commission-based products. And then sometimes you sit down with, a person who does managed money, and they charge a fee for everything, and they say that we're fee-based only, and we're a fiduciary. The problem that we have with all of those is that any one of those individual licenses on its own, totally legitimate and so forth, can only sell a certain group of investments or products or insurance. And so what makes that complicated is that when you're getting advice from somebody, their perspective is only a portion of the windshield in front of you. It's not the entire thing. You don't have the mirrors. You can't see all around you. And I can appreciate that each person is a professional. each person provides that professional service. And even with the managed money person who's managing money, who say, I'm a fiduciary, I have to do what's in the best interests of my clients, which is true. They are a licensed fiduciary. But the piece that we find different is that we actually have all of those licenses. We are insurance agents, we are stockbrokers, we are fiduciaries, and those pieces together allow us to, what I believe to be the highest level of fiduciary perspective out there. And I don't care who you're working with. If they're not doing what's in the best interest of you, whether they're licensed with the best interest thing, changes no integrity whatsoever at all.
No, based upon what people are by license and by law able to offer you, it doesn't mean that they're not doing the best work that they can for you. They may very well be doing
in
the
that
best
domain
that they can, but they're limited.
Yeah.
And so best that they can do might not be the best that exists.
Or the best for you.
Right. So you really want to find an opportunity to invest with people, with organizations that can are at least knowledgeable and can offer you the full gamut of investment product out there.
And I think that's really important, is understanding licensing. So probably detailing that. And one of the places you can go to find out about licensing is Broker Check, which is with FINRA. You can go to FINRA, FINRA.org, and that is where everyone gets licensed for the licensing for FINRA. That is basically the policing body for the SEC. And that's a really great way to find out whether somebody's a stockbroker, what level of broker license. They might not be able to sell stocks. They might only be able to sell mutual funds. There's lots of different levels of investing that people have in the licensing space. And then you can find out if they're a fiduciary, if they have RIA licenses and so forth, usually there. And so there's a lot of different places you can go. And then you can go to the state of New Hampshire or whichever state you have and find out if they're a licensed insurance agent. So there's all these different pieces. And honestly, everyone's website who's a stockbroker or fiduciary will have some level of acknowledgement on their website that you can then go backtrack and verify.
And some of the other information you can glean from these sites is not only the current state of their licensing, which is critically important, but as well, if they've had disciplinary issues in the past, if they've had a series of customer disputes, if they've had people complain about the work they've done. In the presence of those things doesn't necessarily mean somebody's a crook by any means, but they can give you a little bit of a view into their professional past. And, certainly if there's a lot of that going on, there's reason to be concerned. And you can find a fair amount of detail about what those complaints were on this website. It's public access. If you just Google Broker Check, it's another way to get to it. And you can put any licensed professional's name through there and, get the current state of their licensing, what states they're in, where they're licensed to operate, and what their professional past looks like if there's been any kind of dispute.
That's a good point, Dan. And I think when you go to a place like that, in fairness to all advisors out there, if you do see something under somebody's name, it doesn't mean that they're a crook, right? It just means that somebody made a complaint. It doesn't even matter that it's legitimate. It could be that I was talking to a head of a broker-dealer one time, and he told me that he had pages upon pages of complaints just because he was named in it because of some guy he supervised, and he didn't even know his name. So the point of when you look at Broker Check is look for awards. Look where FINRA or the SEC stepped in and actually awarded somebody for some sort of malfeasance. Look for something that caused an issue or some financial harm that wasn't dismissed or found to be irrelevant. Because honestly, in our world, they usually side with the client 95% of the time.
And the other things to look for is you'll be able to find there if somebody was disbarred from the industry or suspended or something like that. When you see that, that for sure there was an incident of some significance that the people that govern us were in agreement when kind of above and beyond a potential mistake or an error. That's the kind of behavior that warranted sanction. That's something to be wary of.
Yeah. So thank you for joining us today. Adopt an attitude that money's not easy, and don't rush to make an investment. Protect yourself. Even in the market downturn, look for strong-sized companies, legitimate investments. Look for good brokers. Look for people who can help you. Look for three-dimensional investment advisors like us who do fee-based planning, that do brokerage work, that do the insurance, that can provide you kind of the all-encompassing, holistic, and look for planners that do that. That's really where all of this kind of stems, is that people just don't get all the advice.
it's a time to be concerned. Do your due diligence, be skeptical, but invest without fear. There's opportunity.
Protect yourself, protect your money. You're listening to Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Thanks for joining us. We'll see you guys next week.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.